Okay, one of the things I think that occurs to everyone who looks at it is that the remuneration standards across both sectors are different. I mean, commission's still very much a part of life in the mortgage broking space. Commissions are a dirty word at the moment and probably going forward in the financial planning space.
Yes.
So I guess the question is how do you handle dealing with clients at two separate levels? One is a commission level and the other level is definitely fee for service.
Yeah.
And if you look at the latest ASIC briefing paper, even volume rebates are going to be very hard to sustain. So how do you homogenise all of that?
From a legal perspective, I think it's quite interesting. What we're seeing, and perhaps from a practical perspective, others are far better qualified than me to comment, but what we're seeing a lot of in the legal area is mortgage brokers are referring clients to a financial planner in a partnership type model, as Peter was talking about, because under that scenario they don't actually get into the conflicted remuneration space at all, because they're not making a recommendation. They are just simply making a referral, and then the financial planner takes it and runs with it. So a lot of models that we're seeing are actually doing that, and that's one way to legally very easily handle it, because you actually aren't handling at all the issue of conflicted remuneration and other things that arise out of the FOFA legislation. So we're seeing a lot of that. But certainly I can understand from a practical perspective, particularly in a business like Tim's or in the bank, where you are actually trying to balance across both, there must be difficulties from a practical perspective of integrating that.
Tim, is that true?
Yeah, well, again, what we're trying to do is teach the broker to refer. We really don't want them giving advice if they're not qualified to give advice. So what we have done is partnered with financial planners, but financial planners who came from a mortgage brokering background and understand the client's needs, because we find in the financial planning segment they tend to chase the clients who more are high net worth, whereas the poor old wealth accumulator tends to be ignored. Smaller premiums, not as exciting in the sense of ongoing wealth strategies. So our focus is really around, as I said, covering their assets and making sure that they have sufficient life and risk in case they have an accident or sickness. So our concern is really more around the property and what they're buying at that point in time. We're really not looking further than probably 5 or 6 years at that point.